Hi, and welcome back to our video series, Trading as a Process, and how we can show you how to rig the markets for your success. So you can gain consistent success over a number of trades, and you can dial in an expectation about the kind of success you can have over a number of trades. In our last video, we talked about the concepts associated with that. In this video, we're going to help you understand what your trading temperament is and to help you know what you can do to improve that trading temperament through Edge and the expectations associated with that temperament. Think about all the power that comes with knowing that and the expectations of that in terms of measuring, monitoring, and even executing on your trades. But before I can get started, I have to tell you, as I always say, this is for educational and training purposes only. I am not a licensed advisor and I'm not a legal attorney, okay? It's just that I really am excited and hopeful that I can help you become a better trader. As a trainer of traders for the last 20 plus years, I have worked with thousands and thousands of people, and I know some of the main struggles that people have psychologically. And I've worked for years and spent hundreds of thousands of dollars trying to figure out what is the missing piece. All of these people who have such a sincere desire to improve their results, and they're part-time traders, so it's not like they can spend full-time doing this. How can we make it something that's simple and easy for them to apply in their trading that gives them language, gives them proper language, proper approach, proper mindset to help them avoid the mistakes that otherwise are easy to make in the markets? Now, what we're going to do here is discover your trading temperament. It's possible for you to know your preferred market approach and the statistical expectations that come with that style. What's cool about that is that knowing that, just that alone, gives you a roadmap for expectations associated with your trading. How many of you can honestly say that you have a roadmap with your trading? If you're on a subscription right now, do you know what the results should look like? Are you anywhere close to what those should look like? If you don't know those two things, those are basic elements that if you don't know that, how can you improve? How do you know that anything you're doing is going to improve your trading? How can you have any confidence in it? How can you have a sense of destiny in your financial future if you feel like you're just lucky, or it's just coincidence that you made a win as opposed to a loss? Now, a lot of us, I think, are looking for those few big trades that turn us into monster profitable traders, but they come around very, very infrequently. And even when they do come around, they don't come around as awesome as it looks. Like Apple, people often refer to Apple and say they've made tens of thousands of dollars. You spent $1 on Apple when they first came out, then you'd have millions today. Well, what they don't tell you is that Apple as a company almost went bankrupt, right? In the late 1990s, they were an almost bankrupt company. Your dollar could have gotten lost down to zero, right? It's very possible that could have happened. It's very easy along the way with these great big runs to think, man, I don't know if they're going to survive. I better sell my stock and move on to the next big thing. And that's a temptation that all of us face and a struggle that we all face, especially if we don't have a plan. And if that plan isn't matched to our natural temperament, even if we have a plan, it's likely we're not going to be able to follow that plan because our natural reactions under pressure are going to cause us to struggle, right? They're going to cause us that we'll be fighting against ourselves because we're under pressure. All of us have natural mental and emotional responses, right? Thought process responses and emotional responses to pressure. And those things happen almost automatically, almost below the conscious thought. We're already reacting to pressure. Well, trading puts us under pressure. And if you aren't aware, don't have the language around how that works, then you'll end up making bad choices and potentially costing yourself a lot of money. And that's what we're trying to avoid. We're trying to help you understand that the markets are rigged for success and how you can put them so that they're rigged for your success. We're excited about that. Knowing your trading temperament helps give you an expectation for how individual gains compare to individual losses. So you know the size of the gain compared to the size of the loss. You'll know how many gains you'll have versus how many losses you'll have over a number of trades. You'll know what the winning and losing streaks are likely to be, statistically likely to be over a number of trades. Now, some of you may not understand all this, but there has been tons and tons of math, statistical math done around flipping coins to prove that even though it's random on individual trades, it's not random over a number of trades. You'll know the outcome over a number of trades, statistically speaking, even if you can't predict with any kind of accuracy the outcome of individual trades or coin flips. That language, giving yourself that language, means you can have a better, more productive, more helpful self-talk. I think a lot of traders struggle with self-talk, especially part-time traders, and it's really easy to get into a slump. It's really easy to talk yourself out of trades. It's really easy to second guess, mistakes and successes to the point where it's really easy to just give up. But you will not be able to achieve what you want to achieve financially if you just give up, right? For the vast bulk of Americans, we struggle to prepare for retirement. Not because we're not working hard, we're working very hard to prepare for retirement. But working hard and saving as much as we can is only one part of the wealth creation cycle. And it's frankly the smallest part of the wealth creation cycle. If you understood the largest part of the wealth creation cycle and realized that it's really just making your money work harder, that's it. You could turn $5,000 into millions of dollars over the course of 30 years if you just make 20% a year. That's it. You don't need to save much more than that. You could start with $1,000 given enough time and a high enough annual rate of return and still have millions and millions of dollars in your accounts. You are not where you want to be today because Wall Street has failed you. We all know that. We all feel that. That's why many of you have bought subscriptions to try to figure out how to get better, what you can do to improve so that you can get where you want to get to financially. And frankly, it's almost not too late. It's almost like you can start wherever you are and just work on your increasing your annual rate of return. A high enough annual rate of return can almost overcome any financial starting point. Whatever your age, whatever the amount you start with, if you can just focus on a high enough annual rate of return and get that return, you could still be where you want to be financially. And that's all about what we're teaching you, is trying to help you understand that you can have a roadmap of your trading. You can dial it all in through statistical probability and know with great accuracy what you're going to end up with as long as you follow these rules. And all of a sudden, that makes it way easier to shift your focus from your outcome of an individual trade to your rules. Did you follow the rules? The outcome of individual trades don't matter. Did you follow your rules? Yes or no? If you did, you know that you're on pace because everything is based on statistics and the math that's associated with how to get statistically accurate results over a number of trades, right? That's the same thing with coin flips. How do you get statistically accurate predictions, results over a number of coin flips if every individual coin flip is random? Well, you use the math, you follow the rules, and you dial it in like we teach you, and then you can do that exact same thing for yourself. So this is how you can have more confidence in your financial future, is to just feel like you have more control over the outcome of individual random trades, or at least more control over the statistically relevant number of trades, right? You can dial that all in. You can't predict with any accuracy what's happening with individual trades, but if you know all the stuff that you need to do to hit a statistically relevant benchmark, you can do that. And then you just follow the rules to do that and you get there. That's the kind of thing that gives you enormous confidence in your trading. By discovering your natural trading temperament, you are on the path to doing all of this for yourself. So let's get started. So what we want to do is ask you a couple of questions. And so make a note of these questions. If you don't already have a pen and paper handy or a phone where you can take notes, well, just pause the video and go do that. And when you're ready, come back and we'll ask these questions and just be honest with yourself, okay? First question. You discover something that looks fun on, in the app store. You're surfing around one day, you see a little game there and you think, wow, that looks pretty cool. So you download the app and you play it. It's fun, you like it, you like the graphics and the gameplay and all that, but it's a little bit harder than you expected it to be. And you think it's going to take you about an hour to develop the skill necessary to get really good at that, to really be able to sit down and play it without having to run into that, that headache all the time. So what do you do next? If you delete it and move on to the next thing, well, then make a note of number 4. You just want to put a 4. That's for question number 1, you would be a 4. If you maybe try again to try to play, just to kind of double check to make sure that it really was like you thought, a little harder than you thought it might have been, just to confirm, then mark yourself for question 1 as a 3. If you're likely to try a few more times, not just once, but maybe a few times to try to practice to see real quick if you can get good at it, then mark yourself as a 2. On the other hand, if you're the kind of person who will spend the hour and take the time it takes to get good at that game, then mark yourself as a 1 for question number 1, okay? You have your answers? You're either a 4, delete it, a 3, maybe you'll try it again, a 2, maybe you'll try it again a few more times, or 1, you'll spend the whole hour and you'll figure it out and you'll get good at that game. Okay, on to question number 2. You're with a small group of people that you feel comfortable with, friends, family, and somebody asks you to share a talent or skill which you're pretty good at, but no one else really knows about, okay? So it's not something that's like that one person knows, but nobody else really knows. So when they ask you to do that, what do? What's your response? If you hesitate, but share after they encourage you, right, then mark yourself as a 4. If you don't provide, if there's no hesitation, you just perform it, but you watch their reactions, mark yourself as a 3. If you hesitate before you start, just to think, can I, kind of in your mind, prepare yourself for this, then mark yourself as a 2, because you want to, you're preparing because you want to do it right. Or if there's no hesitation and no thought for others' reactions, you just jump in and do it, mark yourself as a 1. Okay, so question number 2, you're either a 4 because you hesitate to share your skill or talent, but you do it with enough encouragement, or a 3 because there's no hesitation, but you do watch to see how they react to you, kind of feeling that what their responses are. Or mark yourself as a 2 if you hesitate, but not because of any reason other than you want to make sure you do it right. So you're kind of preparing yourself to do it right. And then finally, mark yourself a 1 if there is no hesitation and you have no thought for others' reactions, you just jump in and share that with your friends. Okay, did you get that? All right, now we're going to go into a screen that talks about your results. So question number 1 is biased towards being right. So if you mark yourself as a 4, then you're in column number 1. You see that where it says 4, column number 1, and you see a dragonfly right there? If you mark yourself as a 1, then you're column number 4 in the just win style, the falcon there. You see that? So whatever you are, mark that down in your mind. I'm at 4, 3, 2, or 1, whatever column that is. For question number 1, you're in that column. And then you go to question number 2, bias towards positive feedback, right? Bias towards positive feedback. Mark yourself as a 4. I mean, if you mark yourself as a 4, you're in the first row. If you mark yourself as a 1, you're in the last row. And you would just go over, you would match the row and the column of the numbers that you match, and that would be you. So for example, if you mark yourself as a 2 in question 1, right, and a 2 in question 2, if you put that down, you would be a win big style Jaguar trader. Okay, you're okay with higher losses or more frequent losses. They have to be small, but you're looking for those big gains. You really like the idea of looking for a big return. Okay, if you marked yourself as a 4 in question 1 and a 4 in question 2, then you are a win frequent extreme. Then you're on the opposite end. You really are so afraid of losing money that you really are okay making very little money on every trade. You just don't want to lose any money. You're going to work very hard and feel very comfortable in an environment where you don't lose money, or you don't have very few, where you only have very few losing trades. Okay, that's the style. Now here are the expectations. The win frequent extreme trader, and win frequent extreme are kind of the same. They're just more extreme versions of it, but they prefer to win 70% of the time, and they're willing to accept occasional large losses. The wolf style trader, they're going to win less frequently, and they're going to accept a few large losses. The largers won't be they'll be smaller compared to the win frequent, but they'll still be fairly large compared to the individual gains that are achieved. Okay. Just win style traders, they just want to, the falcon traders, they just want to leverage whatever opportunity they can, and they generally get about a 50% win rate. Very successful traders trade that way. Counterintuitively, a lot of really successful traders actually trade the win big and the win big extreme style traders. They're the Jaguar and the polar bear traders. They don't mind losing a lot of the time. Most of their at-bats are going to be strikeouts, but they're swinging for home runs on every pitch, okay? And they love those home runs. And we're going to talk about what that means, and we're going to help you determine what that looks like in our coaching, and also in our next presentation, how these expectations connect as a roadmap for you to systematize your trading. Remember, Warren Buffett says trading is simple, but not easy. It's only simple if you have a roadmap to follow. Yeah, it's hard to follow that roadmap sometimes because we're human and we're complicated and we let emotions get in the way. But if you don't have a roadmap, trading is impossible, not simple. So having a roadmap is a big, big deal, and it really helps you achieve a level of equanimity and peace about your results, individual outcomes, right? Because you now have a roadmap of what your trading should look like over the entire year. We're going to help you do that in our next video. Come back to that. Thanks.